If you're just joining me for the first time, my name is Dap Willis and it's a pleasure to be with you guys. I've been trading the market for about 14 years now, and just last year alone, I went on to make $95 million. And in this video, like I stated earlier, we are building a hyper profitable strategy that can enable you guys make consistent, like we want to be part of the 5%, to consistently extract money from the market. All right, let's jump into the video. Let's see what we got. You see, I have my paper and my pen. That's how you know I'm a very serious guy. Like today, you must become profitable. We will turn you into a profitable trading guy or lady, whatever it is you call yourself. You will use the market to make money, to feed your family and buy that Lamborghini. You better. Okay, don't waste my time. Anyways, guys, let's jump into this. So now, what are the fundamentals when it comes to building a profitable strategy? Those guys who are constantly extracting money from the market, what are they doing differently and how can we adopt that today? You see, when it comes to building a profitable trading system, there are several components that go into it, and I'm going to break it down. The very first one is what they call market analysis. A lot of traders are so hyper focused on, oh, give me a strategy that tells me when to buy and when to sell. That's why a lot of traders consistently fall victim to those indicators that tell them on their charts buy and sell. I can tell you after trading for 14 years that those things don't work. What works is, first things first, you need direction. So number one, market analysis. Okay. What exactly is market analysis? Market analysis is very different from trade execution. Market analysis is your ability to go on higher time frames and identify clear directions. We've spoken about market analysis. Now we want to get into what trade execution. This is the interesting part. This is when everybody gets fired up. Everybody's eyes get lit up. Why? Because they want to buy, they want to sell, they want to make the money. Not a problem. Now, what did we speak about at the beginning of the video? Market analysis, right? We have how many time frames in market analysis? Monthly, weekly, daily. 3 time frames for analysis. Once you're done with that, trade execution. Your trade execution should be done anywhere between the 4-hour and the 1-hour time frame. People are like, but I want to trade on the 15-minute, blah, blah, blah. Relax. You can still get to do that. However, you ideally want your setups to form between the 4-hour and the 1-hour time frame. Whatever time frame you decide to execute on is absolutely fine. How do you conduct a very thorough market analysis? Number one, you go on a monthly time frame. The monthly time frame is like Google Maps. I keep preaching this shit. It's like Google Maps. You want to go on a monthly time frame because the monthly tells you what the overall flow of the market. Without the monthly time frame, you will be buying into resistance and selling into support. Without the monthly time frame, everybody is selling, but you will be buying. You do not want that. So go to the monthly time frame. Okay. The M guy, people hate the time frame, by the way, but that's fine. It's okay. I mean, most people don't like it. That's why 95% of them don't make money anyways. But the people who make money, who's part of the 5%, they love the monthly time frame. Why? Because think about it. Why are you driving without Google Maps? Why are you trading without checking the direction of the monthly? Anyways, that's it. Now, once you're done with the monthly, you want to come down to the weekly. The weekly is where you come and plot those key levels. You see, when people talk about demand and supply and reversal zones, they're talking nonsense. They don't even know how to put it. It's on the weekly time frame you come to put these levels. And then once you're done with that, right? Because think about it. If a level can hold on the weekly time frame, that's a level. That's a big boy that you want to pay attention to. And then once you're done with the weekly, you then come on the daily time frame. Now people are like, ooh, what happens on the daily time frame? I'll tell you what happens on the damn daily time frame. The daily time frame is the tradable trend. What does this mean? Oh, he's come again. Let me explain it to you. You see, the monthly candles are massive. No, but that's why it's called market analysis. It's too big. Can't trade it. I get it. Ain't nobody asking you to trade on the damn monthly time frame. But the monthly time frame, once a trend has formed there, it's clear, right? Think about it. For every monthly time frame, there are 30 daily candles. So you see them big chunks on the monthly that go like this. It prints a lot of daily candles. Now, the idea on the daily time frame is simple and straightforward. You want your daily trend to be in line with the monthly time frame. What does that mean? It means that the daily, which is the tradable trend, which you can zoom in to look at, which makes sense to you, You want it to be what? Flowing with at the same pace, in the same direction as the big boss. Because why not? The big boss in this game is a monthly time frame and it dictates the pace. So I hope we've been able to cover what market analysis is all about. First of all, market analysis is where we come to look out for what? Direction and plot those key levels. This will guide us into when we want to start buying and selling. The chances of this trade playing out for you is 9 out of 10. Now, what kind of setups should you be looking out for? Don't forget, guys, we're building a profitable trading strategy here. So, we're going to pick from different hyper profitable methods that have worked before in the past, and we're going to put it together so that obviously you guys can have something that you can work with, right? So, over the years, what kinds of setups have worked very profitably, and which kind of setups will continuously work over the years? You see, from how we just did our market analysis, it's clear as day that we are leaning towards the trend style of trading. Like, we are trend traders, because why? The trend is your friend. It is easier for you to trade the trend. Now, if you're going to be trading the trend, it makes your execution a lot easier. I'll break down a couple of entry patterns that I feel like you guys can adopt that will make you guys a lot of money. The first one is what they call the counter trend line break. Now, a counter trend line break is very simple and straightforward. It is when the market is in a trend, is clearly heading to a particular direction, it pulls back for a period of consolidation, ideally on a 4-hour or on a 1-hour time frame. Let me take that again. You see that daily time frame we spoke about is heading down, for example, right? And for some strange reason, it starts to pull back. There's profit taking, right? When the market takes profit and is pulling back, as the market is about to start heading down again, you want to scale to a 4-hour time frame and you want to draw an adjacent opposite line to the retracement. Meaning it's called a counter trend line. Ladies and gentlemen, work with me, please. Okay, I'll put some diagrams here so you guys can see what I'm talking about. Yes, the idea is for you to plot a counter trend line against the trend that is pulling back, meaning that as the market wants to start dropping again, it must break that counter trend line before it starts to fall again. Now, the next one that I also like to use is called the Fibonacci bounce. Brilliant Fibonacci bounce. Fibonacci is one of the best ways to get into the market. I love it so much. Why? Because every move and pullback is most likely into a Fibonacci zone. What does this mean? Fibonacci is just simply a ruler that measures from one swing to another swing. So let's put this into context with our daily trend that is flowing down. Let's say the daily has dropped, okay? And it starts to retrace. If you take your Fibonacci from where the drop started from to the bottom of the drop where the retracement started from, what does this mean? This is going down. The drop starts from here, it stops here to retrace here, right? All you need to do is take your Fibonacci from swing high to swing low. As the market pulls in between the 50 and 61.8, don't sell inside the Fibonacci zone, please. You want to wait for what? A push out. The market comes in, wait for a what? A freaking push out. And this is exactly where candlestick patterns come into play. Now, most people are like, you see, one thing I notice is most people take courses when it comes to Forex trading. They read baby pips, and they learn all of these little things. The problem, the challenge usually is putting all these things together. You're not supposed to trade candlestick patterns on its own. Candlestick patterns are there to complement an already existing action. Work with me. You see how the market has pulled into your Fibonacci zone, your 50 and 61.8. By the way, any other Fibonacci zone is rubbish. 50 and 61.8. Once the market pulls back into that region, wait for a bearish engulfing candle. In this case, the market is bearish. So daily, start from here, drops, pulls back. You take your Fibonacci from high to low. Your 50 and 61 should line up somewhere in the middle. Fibonacci is nothing but a measurement tool. It just calculates, the length of the freaking wave and just says, okay, 50% means it has retraced 50% of its move.